generational wealth. In this video, we'll go over trading, twin trading, risk management, using 0.1 per $100, risking 2 to 3% of your account. So let's begin. Twin trading, something I use very often, and I'll explain exactly what it is. So, in the sense of me twin trading, for example, let's say we get in for a sell right here, this area, to catch this move. So that's our order, our line. This is where we're getting in. And we're going to get in and we're going to twin trade. So when I say twin trade, that means we will open up 2 trades at the same time. So what I do when I trade like this is this green line here going to be my entry. And then I'm going to draw a red line to be my stop loss. So now let's back up and let's start over. This again is our entry right here. We're going to get in on a twin trade. So what we do is we'll open up 2 trades on the entry right here. And once price moves 30 to 50 pips in profit, it should be 30 pips right here to about 50 pips, I will close one of my trades down. I will take my money out. The next thing I would do, once I take my money out 30 to 50 pips in profit of closing one trade, I'll move my stop loss down on my other trade to about right where right here. So now I'll move my stop loss down to protect the rest of this money, which is $40 or so, 40 pips. So I'll be protecting that now because I moved my stop loss below my entry on this sell. So now let's see what happened, which price shot up and hit our stop loss right here, which took us out the trade. But I'm okay with that. Why? Because remember, we twin traded here. We put in 2 trades. And once one trade gets 30 to 50 pips in profit, or once they get to 30 to 50 pips in profit, I close one of the trades out and I move my stop loss down to protect. So therefore, I'm in a risk-free trade. I'm not worried about risk, what I'm losing now, because I already took partial profits off one of the trades, and then I still collected the pips that's in between my entry and my stop loss just from moving my stop loss. And what I did there is what we call a trailing stop loss. So I'm trailing. So let's show another example here. Let's see. We can show this example. Let's look at it right here. So seeing this area right here, there's a lot of liquidity up there. And also seeing that we have an M forming, right? Because what we would have did before we even seen any of that, that's what we would have seen. This area, and it looks like a perfect M. And what we would be looking for is for price to break here and stop hunt to confirm, which, oh, there it goes, stop hunting. I probably would have got in right there. And as you see, that's kind of another micro, it's kind of another micro M as well right here. So I would have got in right there. So let's go ahead and move our entry up. So that's where we're getting in. Boom, we got in right here. Now this is our entry. We're going to open up 2 trades because we're twin trading. 2 trades in. So our stop loss up here now. With 2 trades in. See, price is playing around, consolidating a little bit. Then, okay, start to drop. So once that price start to drop, remember, once price gets 30 to 50 pips in profit, there we go, 30 to 50 pips, I close 1 trade out. And once I close 1 trade out, I'll move my stop loss down. 1 trade out, collected that money, and look at this. Stop loss down. And I'll keep trailing my stop loss. I'm going to keep on going down. Trailing my stop loss. And remember, we're collecting all these points from our entry, all these pips from our entry to our stop loss. We're still securing our profit, so we're still in a risk-free trade as well. And you see price end up coming up, hitting our stop loss there, but we're fine with that. But as you see overall, if I could have had a stop loss here, left there, price just still kept dropping. Look at that. Price still kept dropping, and we could have collected all these pips, over 300 pips. And like I said, usually what I do is I put the entries in and I let 1 trade go. I let the other trade just go. And that's how we twin trade. So your risk management. Now, in order to twin trade, you want to know market structure, of course. And starting out as a beginner trader, we recommend using 0.1, which is 10 cents lot size per $100 in your account. And keep in mind, and if you're risking 2 to 3% of your account with 0.1 per $100, you're only risking $2 to $3 of your account. So, like I say again, you always want to use proper risk management anytime you're trading, and twin trading seems to work perfectly fine for me as a risk-free trade. Once you learn market structure, like I said, starting out, you want to use 0.1 per $100 and risk 2 to 3%, no more than 2 to 3% of your account.